Happy Monday, everyone. Again, we don't have too much to discuss today because there hasn't been too much movement. I'm going to start with the weekly timeframes for BTC and ETH, and then I'm going to switch over to the DXY and the S&P, and then I'm going to finish with the news. So I'm going to do it the other way around this week, just to change a little bit, and also to leave with you the news that will be bringing some volatility in the market. Now we have noticed that the volatility is limited as well. As you can see on the weekly time frame, we've had a quiet summer starting the 26th of June. We've had a range on the weekly chart of 8.1%, up and down, spikes to the upside, spikes to the downside, all sorts of dojis, hammers at the upside, dojis at the downside, but that's where we are in terms of sideways movement. We haven't broken that range. Now, the reason why I'm starting with the weekly for BTC is because the weekly has had this golden cross, the 20 crossing over the 55 EMA, which is considered to be a bullish signal. Now, again, if we are at the start of a bull run or a bull market, this is where signals are muddled up and we might see them, but we don't trust them because of how price action is holding range. So it is where a lot of traders get caught in the chop. There's not too many gains to be made in the summer, so that's why I'm all for take your holiday, take your time off, because again, the market makers are on holiday as well. The big liquidity is not moved in the summer, it's moved after the summer, and it's generally moved in the opposite direction of where the market is going to go for the next year. So we are expecting a drop in the final quarter of the year for BTC because that's what it's been doing. So we might be ranging till the end of August. We might see a little spike up before a bigger pull down, and then after the pull down we'll start accumulating for the next bull run, which again opinions in the market are saying is gonna start first quarter or second quarter of next year. Now I'm talking about the bigger picture here because in the smaller picture there's literally nothing happening. I was watching the charts over the weekend just because I find it fascinating. So a little bit of my personal interest in this. The moments when you want to go away from the charts are the moments that represent great learning times. So for me, the reason why I'm watching this at the moment is to actually see how the 4-hour, again, completely geeky interest here, technical interest in terms of seeing how the time frames move and how the 4-hour, which is my very trusted time frame. So whenever I'm calling a particular move or a particular trend, the 4-hour is the one that signals it first. Well, this weekend I wanted to see how the 4-hour is being played by the daily, and the daily having ranged so much up and down in this chop, it flicked the 4-hour again up and down. And to me, it's fascinating to see how easy that can be moved as well. Basically, the 4-hour becomes as fickle as a 1-hour, even a 15-minute at times. So yes, so that's why again I'm really fascinated, because it would be for me. I joined the crypto market when the bull run had started previously in 2021, and I haven't seen this moment of transition. So right now I'm wide-eyed watching this every moment of transition from the bear to the bull, because it is one of the most profitable times to be watching it, not necessarily trading it. So I am at the charts and I am charting every day, but I'm not trading every day. I still have the position that I showed you last week. It's the same long ETH position, and it's my only trade at the moment. It is in profit, but I haven't DCA'd in. It's not big profit because it hasn't moved to give me big profit. Big 4-hour daily profit, 20-30% is nothing on the 4-hour time frame. Now, I'm talking about 20-30% at 10x, 2-3%. That's what it's without the leverage. So I'm expecting at least 10-15% in terms of profits, and also I'm watching it because I might have to pivot if this fails to break resistance. Now, BTC, back to BTC, sorry about the waffle. BTC is holding the weekly support, and at the moment, if we're looking at the weekly stochastic, the lines, the blue line is the immediate stochastic momentum, and the red line is the longer term momentum. So the red line is coming down, so longer term is coming down, but the immediate is flat out, and flat out because we've been 2, 4, 6, 8 weeks. This is the 8th week when we haven't moved outside of that 8.2% range. Now, this is the MACD, and I always try to see if I have this situation, decreasing differences to one side. And at the moment, we have decreasing differences to the sales, or in the sales side. But we do have the MACD pointing downwards with no particular indication of a lift. So if the stochastic is leveled out, the MACD is clearly on the weekly pushing down. On the daily, we have the stochastic that turned down, and it turned down on yesterday, on Sunday. It came down quite a fair bit. We had a lift and a drop yesterday. I was watching the lift. I was this close to writing about it on the chat, and then I was like, no. For 2 weeks, I've been telling them what the levels are on the 4-hour time frame, where we haven't gone anywhere. We haven't broken the previous high. There's no point in, again, getting everybody riled up because we're making a lift. Because after that, in the next 2 hours, we've broken down. So at the moment, what's happened is that the previous lift has made a 786 correction. The 786 would be a wonderful correction. This one here. Sorry, it's a 702. I don't know why I measured it earlier and it was 786. I might have made a mistake. So it's a 702 correction, and it's right on this divergence line. Now this is a daily divergence line. Let me make the screen a little bit bigger. Like look how it's been holding. Once this breaks, if BTC breaks this divergence line, if BTC fails to do another top here, and it should be doing another top because it's building a triangle. So this is a triangle formation at the moment on the daily. We have this rising channel as well, or rising wedge, depending on how you want to. So this would be a wedge, and if you put it like this would be a channel. Again, this would be a long-term, very, very long-term channel, and the top would be around 40K, 41K. It would be my next level in terms of targets. There are intermediary targets, but 41K, 35K, and 41K are big psychological levels for BTC. So, what did I want to say? If this divergence line breaks, I'll be watching for a back test and then following it down, because this will be a bigger correction, and it will be a bigger correction for this whole wave that has managed to do a higher high here and hasn't corrected since. So this will turn into a huge top formation, M formation, down, back down at maybe 20K, or most conservatively 24, 25K. So that's what I'm watching for. Basically, to revisit the trade setups that we have. If we break the previous support at 29K, watch for a back test and I would be shorting. If we break the previous resistance, and the previous resistance is the previous peak at 30,200, then this is confirmed as a W formation and we're lifting up towards the 31K. Once that's broken, we're looking at 35, 41, and again we will have to we will have to watch it. Volumes are coming down. So if I were to call a direction at the moment, we have more indications that we are going to come down because we're below the 20. We have the volumes coming down. We have the daily stock down. We have the weekly stock down. There's barely any reason for me to call an uptrend or a reversal, except for we haven't gone anywhere since this whole downtrend started. So generally, when you don't move downwards quickly, you tend to consolidate and you tend to do another peak. That's why I'm conservative about calling the bull run and calling a 40K, because we first need to break the previous peak, that one at 31.8, 31.9. So that's the gist of this, and there's really not more to say, not more to add. I will be posting this in a bit on the chat. So these two are the levels that I'm watching. I'll be watching the 29 and then the 29.8 or the 30.4. For direction, I'm not looking to trade BTC. The ranges are too small for me to get involved in this. Now, ETH is in a very similar situation. We are on the daily time frame. Let me go to a nicer, there we go, a nicer time frame, nicer chart, I meant. We are on the daily time frame with the stochastic turn down, with volumes coming down. The MACD on the daily has crossed up. We have some increasing volumes, but nothing to write home about, nothing spectacular. Again, we are where we are in the summer, and we have the opposite in terms of the weekly MACD. We have a higher difference in the sales here on the MACD, indicating that downwards momentum is gonna continue. The weekly is holding support. The weekly is holding the 20, the weekly is holding the 55. They have been both back tested, and it seems like we are building a rounded bottom formation to do another lift. Now this other lift, again, I'll be very conservative because we are in the summer and we are in 2 weeks' time. We're going to enter the final quarter of the year once August is done. So I'm watching the daily time frame as I am for BTC. And I'm watching this FRVP. It's a little bit more precise for trading purposes, my trading purposes, in terms of support and resistance on the daily. So I'm doing what I started a 4-hour position, and this 4-hour position is now a daily position because of how the daily has moved. I got in at 18.18. I had my stop loss at 17.97, and still I'm still in the same position. So I went in because of how the daily was holding support here on the minimum level of support, but it's failing to break the point of control of this drop. So this drop on the daily that started in July, it's failing to break it. That is the resistance. So 2 levels for Ethereum. The first one is the 20 on the daily, 20 EMA on the daily, which is at the point of control at 1850. We break that, we hold on to that for 2 days. We are up for 1880 or 1900. Or we break the 1820, 1810, and we're heading down. In which case, I would be looking again for a confirmation of a back test. So I'm going to wait for that back test. The way I'm using my ranges at the moment is I'm buying support, selling resistance. I bought support here. I'm still holding it because I have 5% stop loss, only 40% of my capital, had a great entry. However, I am flexible. So besides buying support, selling resistance, I'm also going to watch for the confirmation. And that confirmation needs to happen on the 1-hour time frame, because again, it would be another 4-hour position. It might turn into a daily position as well, but we'll have to see how it moves. We are holding a lot of resistance on the daily at the moment. Last night, it was looking fabulous. I told you this was a tweezer situation on the daily, and it actually pulled it down and then lifted it up and then pulled it down. So both ways. And if we are to change on the 1 hour to see how this wedge has been doing on the 1 hour, I will readjust this wedge because it's been all over the place, and here it is. It's hit again one more time the lower support, and we have 1, 2, 3, 4, 5, 6. Are we gonna break up? We have 3 touches to the bottom, ladies and gentlemen, 3 touches to the top. Are we gonna break upwards or downwards? What's gonna happen? We are right here at resistance at the moment, holding the 20 MA on the 1 hour, but being below the 50 and the 200, I've never seen them get so close. Generally, when the MAs are super, super close like this, a breakout is about to happen. And even the Bollinger, here it got tightened, signaling a breakout, fake out, breakdown, a lot of stop losses and liquidity was collected. But here we are back in the same structure. I'll be posting this structure in the chat so that you have the latest version. Now that's ETH, that's BTC. Again, I'll put up these levels because it's harder to keep in mind numbers. Let's have a quick look at the S&P. Everybody's saying that the stock market rally has finished. We finished inconclusively on Friday. That's why I didn't post anything. When I don't post anything, it's because I'm reserved about putting anything out there. This was the candle. This was the 1 hour candle that the S&P finished on, and it was similar to the BTC and the ETH candle. Which I think they had a higher high and a higher low as well, but that doesn't matter. So the point I'm trying to make was that it finished with a slight retrace. It wasn't a pull down, it was a slight retrace. To me, that means there's space to go either way. Now that's the 1 hour, again, just because I know that Mondays continue the move on Friday. On the 12-hour time frame for the stock, on the S&P, this is floored and we are looking at a retrace. We can't go too far. However, we have entered the 50 EMA cloud. When we get into the 50 EMA cloud, the 50 EMA becomes the target, and that is in line today with the low ADR. M0, 50 EMA, we have a lot of support for the S&P to push lower, and we know crypto is going to follow. So if the S&P pushes lower today to find that support on the 50 EMA, that means our coins will probably push lower as well and find some support as well. Let's see the DXY on the same time frame. The DXY on the 12-hour is holding support. It's back tested the 50 EMA. It is at the moment pushing above the pivot point of the day, but below the daily open. So it's at the M3, which is generally the level for reversal. However, if it breaks above the M3, it's gonna go up to the M5. If the DXY goes up to the M5, it's likely for the S&P and our coins to go to the M0 low ADR. Now, it's been so choppy that lately that when I say something, it's valid for the next hours and then invalidated in the next hours, or the other way around. So it's really challenging right now to call a trend, because the trend at the moment is choppy sideways, favoring the downside. We haven't regained the 20 EMA on the daily. If we don't regain the 20 EMA on the daily, we're likely to push downwards. Let's see the news. I want to keep myself in check and not waffle in all sorts of directions. We have some GDP, which will influence the dollar. We have tomorrow, is it tomorrow? Yes. So tomorrow we have the Empire State Manufacturing Index, core retail sales and retail sales. That's a red flag, which means high impact. On Wednesday, we have the meeting minutes. Nothing new is likely to come out unless some detail emerges and it freaks the market out. If it freaks the market out, that's going to drop the market. So we're probably going to be ranging till this. And if the market's going to get what the market is expecting, it's likely going to go up or range like it did last week. with the CPI and the PPI numbers that were slightly positive. The market expected that. It did nothing except for go up and come down. That's it. It ranged. And then on Thursday, we have the unemployment claims, which are big. Friday, it seems to have a quiet day, nothing big. So just to wrap it up, because I don't want to hold you any longer today, I just want to edit this video, and I hope this recording is solid and you can hear me. Tuesday, Wednesday, Thursday, we are going to have some volatility. The trend is favoring the downside. However, we can still stay in the chop till the end of the month. We might still be doing a little lift up before coming back down. So that's it for me today. Hope you have a nice week. Stay safe out there, and I'll see you guys on Friday.